Good morning, everyone. It is Julie here with your Thursday morning stock market news, where we're getting you up to speed with what you need to know as the market opens. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. I do have to give you an update. I am going to be away tomorrow morning and on Monday morning. I'm flying out west for one of my best friend's bachelorette parties. So wish me luck. I don't think it's going to be a very restful weekend, but I'll be back here on Tuesday morning with your market news. Now, of course, this morning we'll be taking a look at exciting stock market news, notable earnings reports, and which stocks are the morning's biggest gainers and losers. Don't forget, if you want to unlock some fantastic research tools, you can get the TipRanks mobile app by following the link down below, and there's some codes for 10% off as well. Now let's get right into this morning's exciting stock market news. U.S. stock futures are mixed this morning as there's continued turmoil with regional banks, and following the Federal Reserve's rate decision yesterday, they did increase rates the expected 25 basis points and signaled there would be a pause ahead. Right now, Dow futures are down 0.25%, S&P 500 futures down 0.26%, while NASDAQ futures are up 0.02%. One regional bank that has plummeted this morning is PacWest, after they released a statement that said while deposits were rising, they were exploring strategic options that could include a sale. The PacWest stock is down 45% in the pre-market and down 76% since early March, when this regional banking crisis all started. The company said that they have been approached by several potential partners and investors, and that discussions are ongoing. The company will continue to evaluate all options to maximize shareholder value. Their stock is currently rated a moderate buy, with mostly hold ratings coming in lately. Also plummeting this morning is First Horizon, on news that their merger with TD Bank was mutually terminated. Their stock is currently down 51% in the pre-market after the banks said that TD doesn't have a timetable for regulatory approval of the deal, and because there is uncertainty as to when and if these regulatory approvals can be attained. It had been speculated last month that TD Bank was very likely to seek a price reduction, as the First Horizon stock was trading well below their $25 per share deal. The First Horizon stock is currently rated a moderate buy with that price target of $25, but we'll see if that changes following this news. And the TD Bank is currently rated a moderate buy with an average upside of 24%. Darden Restaurants, the parent company of chains like Olive Garden and Red Lobster, has announced their first acquisition in 6 years with a deal for Ruth's Chris Hospitality Group. The deal is for $21.50 per share for an equity value deal of $715 million. Ruth's Hospitality is noted to fit their acquisition criteria for a full-service brand not in need of turnaround and with the ability to make a difference in the portfolio over the next 5 years. It will bring them exposure to the higher-income consumer and give them a small international presence with 22 locations across 9 countries. The Darden Restaurant stock is currently rated a strong buy with an average upside of over 8%. Now, moving over to notable earnings reports, as we have a bunch to cover this morning. And the after hours will be very busy today as well. We'll be hearing from huge names like Apple, Shopify, Block, DraftKings, Coinbase, Lyft, DoorDash, Expedia. The list goes on and on. Last night, we did hear from chipmaker Qualcomm. Their stock is in the red as they had an earnings miss and their outlook fell short. Their chief executive said that the company was still navigating a challenging environment for its business lines. They reported Q2 earnings per share of $2.15, missing by just 1 cent per share, and revenue of $9.27 billion, which did beat by $150 million, but did fall nearly 17% year over year. Analysts do currently rate their stock a moderate buy with an average upside of 22%. The monthly dividend company, Realty Income, did come out with an earnings and revenue beat, plus an increase in their future guidance. They reported Q1 funds from operations of $1.04, beating expectations by 3 cents, and a revenue of $944.4 million, which grew 17% year over year, beating expectations by over $61 million. Analysts currently rate their stock a strong buy with an average upside of 14%. And real estate website Zillow also coming out with an earnings beat. They reported quarterly earnings of 35 cents per share, beating expectations by 20 cents. On the revenue side, they had $469 million, which beat expectations by $43.5 million. Analysts currently rate their stock a moderate buy with an average upside of 16%. Then moving to the pre-market this morning, we've heard from Moderna. They came out with a big earnings beat. They saw a lower than expected decline in demand for their COVID-19 vaccine. They reported Q1 earnings per share of 19 cents, which beat expectations by $1.94. And their revenue of $1.9 billion did fall 69% year over year, but still came in $730 million ahead of estimates. Their stock is currently rated a moderate buy with an average upside of 70%. Anheuser Busch also came out with an earnings and revenue beat, plus reaffirmed their fiscal guidance. They reported Q1 earnings per share of 65 cents, coming in 3 cents ahead of estimates, and revenue of $14.21 billion, beating by $160 million. They confirmed they're expecting their EBITDA to grow in line with their medium-term outlook of 4 to 8%. Their stock is currently rated a moderate buy with an average upside of 13%. And Peloton is slightly in the red this morning after they posted a wider than expected loss. For their Q3, they had a loss per share of 79 cents, which was 30 cents wider than expectations, and revenue of $748.9 million did beat expectations by $40 million, but did decline 22% year over year. The stock is currently rated a hold with a price target of over $12. Other names reporting in the pre-market this morning that we don't have time to cover is going to be Royal Caribbean Cruise Lines, Datadog, Shell, and ConocoPhillips. Now let's take a look at which stocks are the morning's biggest gainers and losers. Our biggest gainers this morning are led by a company called Arconic on news that they're nearing a deal to be acquired for $30 per share. Trading under the ticker ARNC, the stock is up nearly 28%. They're followed by Shopify under the ticker SHOP, they're up 17.5%, and Wayfair under the ticker W, up 11.3%, both following their recent earnings. And our biggest losers this morning are led by First Horizon on the news of their TD merger being terminated. Trading under the ticker FHN, they're currently sitting down about 42%. They're followed by Synaptics under the ticker SYNA, down about 22% following their earnings, and Option Care Health under OPCH, down 19.8% following news of a merger. So that is going to be everything for Thursday morning's stock market news, getting you up to speed with what you need to know as the market opens. Don't forget, I am gone tomorrow and Monday, but I'll be back here on Tuesday with your stock news, so I will see you then. Thank you guys so much for watching. If you made it to the end, say good morning in the comments. Have a fantastic weekend, and I'll see you back here next week.